Well, yes, after Avenue Supermart last week, two other FMCG companies have reported their operational updates for the quarter gone by. And first up, let's talk about Dabur. And it is reported weaker than expected set of operational numbers. Consolidated revenue is expected to be in low single digits, but operating margins are expected to remain flat on a year-on-year basis. As far as rural versus urban consumption trend is concerned, they say rural continued to report growth, but urban consumption continued to be on the slower side. Modern trade continued to report strong set of numbers, but general trade was under pressure. They say modern trade, e-commerce and quick commerce reported very strong growth in the quarter gone by. Macquarie has maintained its neutral stance with a target price of 560, while CLSA has maintained its whole stance on the stock with a target price of 582. Meanwhile, Marico, this one has reported strong set of numbers, steady demand trend on improving rural consumption, and urban growth, they say, was stable on a quarter-on-quarter basis. So that's the underlying from both these FMCG companies, that urban growth was on the muted side, but rural consumption growth was very strong on a sequential basis. They undertook another round of price hikes. Marico also undertook, and so did Dabur, and they say copra prices continue to remain firm. We have Morgan Stanley, which says third quarter revenue growth in mid-teens that Marico has reported was ahead of what the street was working with. CLSA, meanwhile, has maintained its underperformed stance with a target price of 482 as far as Marico is concerned. So yes, Marico numbers were better than what the street was working with, but Dabur has reported muted set of operational updates.